Xchanging has performed very well in the first half of the year. We've met the expectations which we set for ourselves at the beginning of the year. We've met the expectations of the market. Overall, we've seen a year-on-year improvement in the operating profit for the business on a like-for-like basis. We've seen an improvement in the operating margin, and we've ended the period in a very strong financial position. Business processing services have performed well, despite the divestment of the interest which we had in XTB. In technology services, we've done extremely well, even though we've seen the exit of part of the LME business. And then in procurement, we've seen an improvement in performance overall, despite exiting the ex-HRS business. So overall, I think it's been a very, very good performance in the first half of the year. The 2014 investment programme was flagged very much at the beginning of the year. So in the February results meeting, we said we would, as a company, invest heavily during the year. You can really put the investments in three categories: so organic investment, inorganic investment, and then investment for internal change. So on the organic side of investment, we've invested very heavily in the continued development and the acceleration of the development of Zuba. So this is so we can take the product into new markets, and two examples of that would be the US admitted market and also the workers' compensation market in Australia. And the second area of investment has really been around the insurance market repository. That's part of an ongoing commitment to invest in that area as a result of the contract that we won. And then finally investing in the procurement technology platform, so building on the Market Maker 4 acquisition which we made last year. In the inorganic area, we announced very recently the acquisition of two companies, Agency Port and also Total Objects. And then in terms of the internal investment, we've been really focusing on trying to improve the cost base of the business and build what we call the backbone of the business around shared services and around new technology that we use in finance and also in HR. So much of the heavy lifting, if you like, on the investment programme will take place during this year. And then as we move into 2015, we should see the investment, certainly from an organic perspective, start to reduce down to more normal levels. The recent acquisitions which we've made, Agency Port and Total Objects, both insurance software businesses. So Agency Port is a business of around about 160 people operating in the UK, and it provides insurance software into the commercial insurance market and also into the London market, and also operates, interestingly, in the healthcare market, which will be a new market for us. It has a product which is branded under the name of Open, and essentially providing some similar offerings to Zuba, but also has a very interesting new offering, which actually interestingly is called Exposure, and that is used as a risk aggregation modelling tool effectively, and that will be a useful add-on to the existing software which is currently marketed by Zuba. So Total Objects is a business similar size, so around about 140 people, roughly 40 of those people in London, and then there's also a development team in St. Petersburg. They're operating in a more specialised area, so primarily in the London market. They provide a software offering for managing agents and also for the smaller retail brokers. And those are both segments of the market that we've not really been strong in the past. And a very interesting area that they're operating in is in what we call the binder market. So that's really about providing an offering to the market for binder authority or binding authority. It is a very specialised area, and the reason why that's of interest is because within our insurance business processing business, we do have an offering called Binder 360. And the offering from Total Objects is called Binder Cloud. So effectively it's providing this specialised offering as a cloud software offering. So it's a very exciting area and will very much complement what we're doing in that business. So I think together, if you take the Zuba business, if you take Total Objects and Agency Port as a combined business, then it provides us with a very significant business, a business of scale and substance, operating in a high growth market, where increasingly insurers are looking to replace legacy systems which have become very expensive to maintain. So I think it's a very exciting development for Xchanging, very much puts us up there as a significant global competitor in the insurance software market. We've just also announced the further investment within the Fonds Depot Bank business, and this has arisen really as a result of our partner Allianz Global Investors exercising their put option. So that now means that we've moved from owning 51% of that business to 100% of the business, and of course provides us with a lot more flexibility now in terms of the way that we develop and take that business forward. So I think that's a very exciting area for our financial services part of the business as well. I think the direction of travel for Xchanging as a business has really continued very much along the path which we started 3 years ago. The real emphasis has been around providing solutions to customers' problems and effectively trying to use technology and innovation, insight into the market to deliver differentiated business processing services that can bring value to our customers' businesses. So what do we mean by that? Well, effectively means that we're in two very important areas. So one is really the sale of technology and software offerings directly to a customer, and they use those offerings essentially to incorporate them in their own processing platforms. So examples of that, of course, would be insurance software, but also Market Maker 4. So those are very real technology offerings. So NetSet, again, would also be another good example of an offering where you're incorporating technology into the customer's systems and processes. Then on the other hand, we're also selling what I call technology-enabled services, where we effectively provide a service using our own platform that will effectively have a technology capability. And that technology capability could be something which we've provided ourselves, where we have our own intellectual property. So a good example would be our fund administration business. Or it could be where we are using third-party technology. So, for instance, the investment account administration in Germany, we use a third-party technology offering. Or indeed, we could be partnering. So, in the Internet of Things, for instance, which is an exciting area for development for Xchanging, we're partnering with a company called Machine Shop, using some of their technology ideas to develop an offering for the Internet of Things market. So, the strategy really, as set out some time ago, continues. The real focus is about trying to build what I call a technology-enabled provider of business processing services. The outlook for the full year and for 2015 is really quite straightforward. So we said at the beginning of the year that despite the businesses that we divested in 2013, that the 2014 operating profit would match 2013. And we also said that we would see a resumption of growth in profit and revenue in 2015. And we're on track to deliver that.